Carpel. I'm CEO and founder of Tradespoon and Yellow Tunnel, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, let me know. Always want to welcome new subscribers back in Florida. All right, Fred, great. Welcome back. I'm actually going to Florida on Sunday to move some furniture. So read my blog on Yellow Tunnel. I'll tell you all about it. It's going to be a lot of fun moving furniture. So this is my brief bio for those of you who are new. Also, disclosures are very important. Please read them. Trading stock and options involve risk. Not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Again, we talked about volatility in the market, right? A lot of uncertainty. Yesterday, Bill said, got caught in the volatility. It is a news-driven market. The question is, are the news changing the trend, or it's kind of more of the same? So yesterday was, I think some of the regional banks like Zion, I think there was another one, reported write-off of bad debt, right? And then Jamie Dimon said they're quoting cockroaches. If there's one cockroach, he expects there's more cockroaches in the system. So market, after those comments yesterday from the earnings, regional banks sold off significantly, right? Retesting this week and last week low. We retested this week low. And again, there was a tweet from Trump or a press conference where he said that, again, don't worry about China. We can, we'll find amicable solution. It's what did he say exactly? You can't. It's 100% tariffs are unsustainable long term. I mean, he said it on Sunday. He said it yesterday. Market obviously likes it, and we bounced off the lows. But we're just trading in the range. So all these news are just an excuse for market either to rally or to sell off, right? You do start seeing some breakdowns in yield, which is important, and Bitcoin. So I would keep an eye on that. But the idea is that you don't really know what the next tweet will be, right? It could be positive, it could be negative. Obviously, if the market is oversold, positive tweet will cause the market to keep rallying, rebounding, right? If the market is overbought, negative tweet will cause the market to pull back. So concentrate on the economy of control. What does that mean? That you don't really know what the next tweet will be, right? Especially today, we have options expiration, so I would expect the market to be volatile. So I would concentrate on things that are within your control. What's within your control? Again, risk management, right? How many positions you have and what is the position size, right? Ideally, I would, at this point, I would be prepared for 10% rally or 10% pullback. Both scenarios are quite possible, right? It just depends on these news. And, I mean, if you have an opinion that US will reach an agreement with China, and these dislocations in repo market overnight, we had some dislocation in repo market overnight, or, to paraphrase Jamie Dimon, cockroaches. If you think this is just a short term, right, and this is not a systemic trend, and we reach an agreement with China, the market will rally 10%, right, going into the year end. If it's a reverse, right, if there's negative news, or if we don't reach, if there is 100% tariff, on November 1st, even though it's unsustainable long term, but if it is, and they can't reach an agreement, well, then the market is going to pull back 10%. So this is the idea of positive negative visualization. You have to be prepared for both scenarios, up 10%, down 10%, right? And make sure the key, at least from my perspective, is that if I'm down 10%, if the market is down 10%, let's say I'm bullish, this would be a good news. It's not a good news because your portfolio is down 10%, assuming beta 1, but it's an opportunity. You have ample amount of cash that you can deploy and add, because long term you think market is still an uptrend and AI is here, and banks have strong earnings and all these cockroaches are just. I think this is Mark is getting to look at the more like a stinky fish. I think pullback is in order now. Mark, welcome back. Hydrated muffin. Mark, can you hear me? Can you type it? Because there was some setting that says that. Yes, okay, perfect. So yeah, pullback is in order, but again, same scenario. If you think that pullback is in order and you bearish, just so right, the reverse. If you're bearish and you hedge in your portfolio and the market rallies 10%, the idea is that maybe your 401k, this was just a hedge and you have 401k or other bullish positions, or if you miss out, then you're also okay, right? So going through this positive negative visualization, up 10%, trade what you see. Yes, John is back. Good morning. Shift pullback, right? So I would be prepared for both scenarios, right? Personally, long term I'm bullish, right? I do have probably bigger than average cash position. If usually I have 30% in cash, I have probably 40 or 50% in cash right now. So if there's a 10-20% pullback, each of these levels, 10% down, 20% down, I would be adding to my bullish positions. I do have a hedge, right? I do have a hedge, so I'm prepared for both outcomes. If the market continues to go higher, great. I can start deploying cash, or if it's breaks to new highs. But for now, I'm making assumption that the top is set, right? And until we break the top, you sell into the rallies, right? You sell into the rallies. So that's the most important. In terms of stock forecast toolbox, in terms of seeing where the support and resistance levels are. AP, well, we have new people. Good morning, AP. Welcome back. Welcome, AP. Let me know if you have any questions. Usually we talk AP, we talk about, this is live trading room, so I'm going to go to specific trades example, and then AI and market in general. But we're trading stock and options here. But we can talk about futures or Bitcoin or anything else you're trading. What do you trade, AP? And let me know what kind of information you're looking for. So market basically model turns neutral, right? This is AI model. It trains and learns on the data, makes it has an inference engine, it makes predictions based on the trends. It sees 656 support. So yesterday's low, or this week low, 655, 654, and last week high 667, right? So in the next 10 days, you can expect the retest of the highs, and you can also expect the retest of the lows. So this is what the model says for the next 10 days. Long-term model, right? The long-term prediction, if you zoom out to 6 months, it basically says, again, 676 is as good as it gets for the months of October. We're halfway into it, and then support is at 624, which we reached half point, midpoint. So we're not in oversold, we're not in overbought, right? And if the market is at 624 in negative news, I would not be surprised. And if the market is at 676, I would not be surprised. Overnight, if you look at the S&P futures, if you look at the S&P futures, again, we had a pretty sharp sell-off starting with the regional banks announcement of, bad debt, and to paraphrase Jamie Dimon, cockroaches, right? So we had sharp sell-off and retest of the lows, right? Retest from Friday's lows. And then as soon as the Tom tweet came in, we're, bounced back. So if you look at the positioning, how people are positioned into today, right? And again, I know some of you are not option traders. That doesn't mean you need to leave, right? I would look at the options data. I think this is a great indication of, or futures data of position, right? Going back to game theory. It's not important what John thinks or what Vlad thinks. What's important is, what majority of the people think, right? And how they position, So this has been familiar setup. The flip point is now 65.30, right? So this week low and last week low is an important support. But you can see people are already building positions at 6,000, right? Very large positioning at 6,000, very large positioning at 5,000, right? We've seen this with all the sell-offs where people are, going back to Nassim Taleb, right? How he made money in the global financial crisis, buying these out of the money puts for pennies was the idea that, they're going to have, 10, 50, 100 time return, right? But we do have an expiration today, right? So October expires. We have the data that I was shown was incorrect yesterday, so I apologize. A total delta exposure. Let me see. Sorry. Let me change it to gamma exposure. End of day. Open interest percentage. 1 month. Okay. Show chart. So main supports are 7,000, right? So 7,000, that's all-time high on SPX. Currently you have 6,500, that's the recent low, 6,500, 6,550 is very strong support in terms of puts, right? Yellow bar is puts, and then it decrementally goes, but huge position at 6,000, right? So, obviously if there's a policy mistake and if we can reach an agreement with China, 6,000 is not out of the question. So a lot of people think we can reach 6,000. But, first thing first are in terms of total gamma, right? So it's about $90 billion in October, which expires today. So a lot of that will expire worthless, not expires worse, but expiring. So all these positions are gone, and now people are moving. Actually, November, only 22 billion. So that information was correct. 22 billion. Not a lot of position in November. Most people are positioned now into December. Actually, that's building to 51 billion. It's not a huge position in historical terms, but it's still relatively large considering that it's not next month's expiration. So most people, I guess, thinking about that, buying November doesn't make sense because of the tariffs are due on November 1. So they're going into December and hedging, right? December and hedging. But expect volatility to continue, right? If I zoom out, or sorry, zoom in, in terms of key support and resistance levels, so 6,700, right? Yesterday I, closed the short put, right, of the put spread, closed the short put because I said that, you need, like John says, trade what you see. Until I see a break above 6,700, I assume that that's your resistance number one, right? And then 6,600, we actually reached 6,650 in overnight section, but now now I think we're higher. So support number one, right? 6,600 to 6,550. This is this week and last week low. So support number one, and then obviously the next large level of support is 6,500. So support number two. Right. So depends on if you're bullish, right? If you let's say you're bullish, you said, okay, Trump just tweeted that you have nothing to worry. They will find a solution with China, and banks reported strong earnings. Regional banks bounced back, right? We had some of the regional banks, ALE, don't know if I pronounced it correctly, but they, regional banks that announced their earnings today basically said our balance sheet is fine, we don't have bad credits, and actually write-off due to bad loans were less than expected, and a lot of regional banks are bouncing back with the idea that this is not a systemic risk like during last couple of years ago during recession, but this is just a one-off exceptions, right? So if you prescribe to that theory and you're bullish, if you're doing day trading, I would use 1% stop loss, right? So at this point, it would be 65.50, right? So from here to here, that's your stop level, right? Probably a little bit more. VIX was actually 28 or 27 overnight before Trump tweet, so I would maybe allow 10 points stop loss. Especially today, market is going to be volatile, right? People are going to close their October positions, futures, options, right? And that opens the door for next week for the market either to be at 6,700 or be at 6,500, right? Because a lot of positions are going to be closed today. People are going to roll their positions. Looks like everybody's rolling into December instead of November. And based on the good news, market will be at 6,700. Bad news, it will try to break through this week and last week low, right? So 10 points if you're doing day trading as your stop level, and then maybe if you're thinking about weeks, I would use 6,500. So it's, what is it? 12. I'd use maybe a 2%, right? 3%. Let's do it 15 points. 15 points, right? So I'm talking about spiders. You can't buy SPX, but spiders just divided by 10, all these numbers. So on the $10,000 account, I propose to only risk $250 if you're $10,000 account, right? Position size is the most important. You can't predict what Trump is going to say next, but you can predict your own emotions and how you will feel if we are at 6,700. How will you feel at 6,500? So personally, I think on a $10,000 account, which is average account, $250, right? 2.5% is at risk, and then you just divide by these numbers. If you're doing day trading, okay, you can buy 25 shares. If you're doing longer term, if you're a swing trader or a momentum trader, okay, 2-3% stop loss, right? And that would be my approach to current market, right? And try to get and the only way you can get the emotions out of the way if you are not over leverage, right? Not over leverage. You hear these stories that people lost all of their, funds when Bitcoin dropped from 126 to 105 in a couple of days. I mean, yeah, you have 20% drawdowns on some of these volatile asset class, and if you're over leveraged and your portfolio is down more than 20%, we're all panic, right? We all panic when your portfolio is down over 20%. So Bitcoin broke through that support level, right? So this is one area of concern, and looks like Trump tweets is not helping Bitcoin. All right, Bitcoin is still down, so that's one area of concern. Like this would be the bear case. The bear case would be Bitcoin is broke through the long-term support and continues to fall, and 10-year yield yesterday broke through the 4%. Right, let's put the 4%, and and staying below 4%, which is also concerning for the market. And then news, I don't know if anyone caught this, but banks went to repo facility. The repo amount is getting tighter, smaller, right? The amount of liquidity is getting smaller. And, Fed is now considering whether they should continue to decrease their balance sheet or maybe stop, reducing their balance sheet. So that could create some liquidity issues, and you already can see it in the bond market, right? And I would pay attention to high yield as well. VIX was 28, almost 30, right? So VIX was almost 30. So not oversold conditions, but elevated volatility. And as soon as Trump said you have nothing to worry about, then back to 24. So no new signal. QQQ is flat, SEM is flat, spiders flat, small caps flat. Regional banks are bouncing back. Very sharp sell-off, above average volume. But again, the idea is that stocks like Ailey, there was other one they reported, and it wasn't as bad as everybody thought. Let me see what other companies reported the earnings. Research. So who reported? American Express, not regional bank, but nonetheless credit cards. So companies are still, people are still spending money. We're above 50, above 20-day moving average, almost at all-time high. That's positive. So let's see, we have Huntington. I have a bank account in Huntington. So sharp sell-off after the earnings, not as bad as everybody feared. So it's still holding. FITB. Fifth Third Bank Corp, sharp sell-off yesterday. I mean, stable, right? Stable. Ailey, I mean, it's a little bit different, right? It's an internet. It's not your traditional regional bank, but it's sharply up 7%, right? And then CMA, right? CMA. A lot of regional banks announcing earnings today, and you know, it's stable, right? We're stable for most of the. In terms of other earnings, United Airlines. So this is one of the earnings trade from this week. So if you did that trade yesterday, right? I sold for. So you can see these trades in the Yellow Tunnel. If you're a Yellow Tunnel subscriber, you can see it here, right? So United Airlines, I sold for 10 cents, the put spread, and sold the call spreads for 8 cents, 8 and 8. So it was able to collect 19 cents on a risk of dollar, right? Difference in strike minus the risk. So basically, roughly 20 cents maximum gain, 80 cents maximum loss. So 25% gain, and United Airlines is trading at a 99 level. So unless we have a sharp sell-off like we had yesterday, you know, I do have an order to try to close it for 2 cents. So it didn't get filled yet towards the trading. That's something you want to watch, right? Because we talked about this trade yesterday morning, and I said that even though it was far away from the market, out of the money, you know, but you know, you could have these sharp sell-offs, and you know, it's still didn't get filled. So a lot of people think, you know, can still get to 95 level. Okay, so that's the trade from yesterday. You can also find it here under lead circle. And then the second trade was the spiders, right? So in the morning, I said I closed the 620 put, right? I closed the 620 put because I didn't think we're gonna break through the 6,700 yesterday, right? Or SPX, right before we left at 6,700. I thought this is an overhead resistance. You know, it'll take some good news to break it. So I basically closed the spiders. Let's look at spiders last 7 days. Closed the spiders at 354 when we were at 6,700 and opened it again at $6. So at this point, I reduced my trade by $3, right? Because I closed and then reopened when the market dropped, right? When the market dropped. So now it basically almost a risk-free trade, right? This trade, it doesn't cost me anything, right? I put it for $3. I made $3. So now this is a perfect position to be. So I do have a hedge in case spiders continue to drop to 640 or 620 level, right? What's the 50-day moving average? Around 650. So if the 50-day moving average doesn't hold, right, because we had a retest this morning, right, before Trump tweet, we retested those, right? We broke through the 50-day moving average. I mean, we retest 1, retest 2, retest 3. But if you think these retests will continue, right? We're talking about ABC pattern, right? Very interesting pattern, right? Especially during market sell-off, right? Usually it continues, right? ABC. All right, so you have A, you have a sharp rebound, almost retest of high, maybe 70%, right? Going back to the Fibonacci numbers, right? And 20-day moving average retest, and then pullback, right? So right now it's just a retest, but wave C usually goes lower, right? Usually goes lower. And again, you have above average volume here. So that's at least something to expect, right? Short term, it's overbought, so it's a put spread. But you know, if it breaks through these levels, then you know the spread is gonna. I mean, there's no risk right now, but potentially I can make $20, right? Potentially, if the market continues to pull back, if we do have 10% pullback, 5% pullback, then potentially we can, you know, maximum profit $20. So that's the trade from yesterday. Any questions? Any questions on Discord? Happy Friday, Russell. Welcome back. Hydrated Muffet, Cherry Blossom, Mark, AP. Let me know if you have any questions. So what other positions do I have? Amazon, still have a small Amazon position. I trimmed the Amazon position. It's staying at 200-day moving average. I closed half for profit. It's retesting the liberation, or not, it's not Liberation Day, but August lows, the earnings lows. You know, I'm holding. I think Amazon, Microsoft, they're underperforming. Without them, market cannot make new highs for sustainable period of time. But I think these are all opportunities to, as we get deeper into the earnings season, and at some point, just like Trump said, you know, long-term tariffs on China are unsustainable. They, you know, their economy is going to fall apart. So, you know, owning small stock positions makes sense. Do have ES, right? So utilities companies as a way to hedge. For usually they're doing better than the rest of the market. It's above 20-day moving average, continues to kind of grind above 20-day moving average, so the kind of more of a defensive play. Halliburton, the stock is an issue, right? I thought this was a signal from a couple of weeks ago. I thought it's gonna continue its breakout. It's reversed down together with the market, together with the crude oil. So yesterday we had a new low. Today it's trying to bounce back. We had Schlumberger. Earning companies are starting to announce earnings. For now, you know, still down. It's not making new lows, but you know, nobody's impressed with their earnings. So I think I need to close this position. I'm just waiting for, you know, seeing if these lows will hold and maybe a short-term rebound. If not, then I would just close. Right. So that's Halliburton stock. And then what else? QQQ. So if you know, another hedge, I have 580, 560 put spread on QQQ. Let's see how much it's worth. Probably want to close that and maybe reopen December one. It's up. I mean, today market is going to be volatile. Let me try to see if I can capture maybe $1 on the QQQ spread. This is a trade from this week. Also bearish, right? This is defensive trade. Overall, right now my portfolio is bearish, right? It's bearish because these spiders in QQQ, right? Strike prices are, you know, very large. So I bought it for 376. See if I can close it for 470. We have December, October expiration today. Then maybe if I do get filled, I would roll into December next week. I mean, I don't want to be overly bearish right now. You know, net portfolio is bearish, right? It's bearish. Mario, what is the put spread trading out now? For QQQ put spread is trading right now at $4.10. So $4.10. It's 60 cents away. 60 cents away. And let me see. Let's look at the SPX. So kind of volatile section. Yesterday's low 6,600, right? So next level on SPX is 6,600. So I would watch the 6,600. If it doesn't hold this level, we have retest of, you know, the futures, where the futures market were, right? The futures market were retesting the lows. So if the 6,600 on SPX doesn't hold, expect retest of, you know, morning session, pre-market session. In that case, QQQ, potentially could be at $4.70 or higher. Any questions on the QQQ trade? United Airlines, let's see, what's the United Airlines is trading at? Okay, so it's maybe 2-3 cents. So in theory, United Airlines will get filled, and collecting premium on both sides sounds like the right strategy, and that should be profitable. And then finally XLV. So I did add to XLV position, right? I've been trading around XLV. I mean, LA Lilly today, right, got caught in Trump tweets, right? So down significantly, but healthcare in general has been a good place to hide, right? It's oversold, bounced back on Trump, new policies, and then healthcare is positioned well. You see some of the companies like Johnson & Johnson. I think are doing well, right? UNH trying to break out. Sorry. Let's see, you have a strong price action in some of these names, healthcare names. So that's it. I don't have a lot of bullish position, mostly bearish. Right now, I'm basically waiting for, basically two things happen. We're either gonna break below 50-day moving average, right? Below 65.50, next level will be 6,400, or we're gonna try to break out above all-time highs. Right now, we're kind of stuck in the middle, and that's what this tool basically shows you, our model that, we could be at 670 or we could be at 620. John, thank you for kind words. I appreciate it. Fred, thank you. Claude, Don, Fred, Cecile, Harmader is back. Welcome. Lalit, Larissa, Louis, Maria, Dr. Simon, Patrick, Bill. Any questions? So for now, I'm watching spiders. And I did put this trade. So, okay, so I have a QQQ I'm trying to close, and then spiders on the rally. If it rallies, then I'm trying to close spiders again for $3, which is basically retesting that 6,700 level in SPX. Then I would close it for $3 and kind of rinse and repeat this trade, because we could be stuck in this range, for the next couple of weeks, right? We have government shutdown, we have China tariff on November 1st that's due. Until there's some clarity on the situation, gold and silver continues to rally, right? Gold and silver continues to rally. All right, any other questions? All right, let's see how some of these earnings stocks. United Airlines is at 100, that's good. LA Lilly is at 40. So if you did LA Lilly, right, I said 42, 43 call, I think during close about 41, 42, but this would be a good trade, right? The stocks are going in the right direction. So you can close LA Lilly. I mean, if you did 42, if you did 42 call, it's basically, yeah, trading at the same level. American Express at 335. I did the 340 spread, 340, 342.5. So that's getting close, right? 1.5%. We actually were at 340. So that's American Express. Let's see, and what else? Citigroup, JP Morgan, Schwab, Schlumberger. Schlumberger is actually turning positive, so that's good. Close the Schlumberger put spread, right? We talked about the closing bell Schlumberger put spread. It's actually turning positive. So I sold the put spread to finance the debit call spreads, right? So I sold, what did we talked about? 30.5 put. So 30.5 put, 29 put, sold, took that premium and bought next week 35, 36. Pre-market, I think we were close to 34 level. So we'll see if it continues to rally next week. and Taiwan Semiconductor. Okay. Any questions? Meanwhile, Schwab is up, United Airlines, JP Morgan, Bank of America, Caterpillar. So more ideas under active trader, right? If you're looking for active trader ideas, then today was Caterpillar. So Duke Energy and Caterpillar. So utilities, right? Like Duke Energy looks good. Right, they continue to make new highs, and then Caterpillar, I guess, doing better than I would expect. But you know, trade what you see, what the model says, not what you think. But Caterpillar looks very strong. SPX is flat. Broadcom pull back. Tesla kind of consolidating. Google consolidating. Microsoft consolidating. Amazon consolidating. Apple consolidating. Right, they're not leading the market. And then our favorites, AI stocks, Iran pulled back significantly yesterday. MP sold off yesterday. IONQ sold off yesterday. Palantir sold, consolidating. Affirm consolidating, right? Tempus pulled back. So high beta, high momentum stocks, AI, they're consolidating and people are taking profits. Any questions? On Discord. Gotham, welcome. Any questions? Sorry, we're a bit done. Gotham, let me know if you have any questions. But I just went over my positions. You can see them on Elite Circle on Tradespoon side. You can see them on the earnings power trader, dynamic power trader. Trading stock and options predominantly, both taking advantage of the volatility. So if this is something you're interested in, please join us. Next broadcast would be Tuesday. I'm actually going to be off on Monday, so Tuesday is the next broadcast. So I'll put it here. You can find the recording, Gotham. Yeah, you can find the recording here. I just posted the recording, and then as just a reminder, Tuesday and Friday we have a live trading room. So next week will be Tuesday, Thursday, and Friday. So next week it's Tuesday, Thursday, and Friday. And then Monday and Wednesday, and Monday, it will be with Keith on the GoToWebinar platform. All right, guys, have a great weekend on the Discord. Thank you, Gotham, AP, thank you for joining. Mark, Cherry Blossom, Harid Mafin Rasser, always good to see you guys back. All right, have a great weekend. I'll see you guys on Tuesday. And GoToWebinar. Let's see, where is the only trade I need to watch is United Airlines. It's kind of stuck at the 3 cents, trying to close it for 2 cents. Thank you, Bill. All right. So American Express 340, 342. Let's see, close 340, 342 and a half. Let's see, American Express. Let's look at the position of American Express at 35. Express. See, 2017. See. Number American Express. Doesn't show me. Okay. All right, guys. We do have a strategy roundtable in half an hour. So please join me. Thanks a lot and have a great weekend. And Keith will be at the closing bell, so stick around. We're going to have probably a volatile session, so it's important. The close today probably is important as well, right? I would not ignore the close. Like 10-year yield, is it above 4? Is it below 4? That's important. And then where the SPX is going to close, right? Is it above 6,600 or is it below 6,600? Right. All right. Thank you very much and have a great day.